Okay, at these levels of oil prices and the uncertainty in the global economy, what's activity like? What are your clients telling you?
Well, activity at the beginning of the year, we saw it start to increase, but I think it's somewhat leveled off as clients look at the macro situation for oil, and they're looking at the oil price specifically. And there's really four factors that are influencing oil price today. I think people are looking at the yield curve inversion and what that means for oil prices. They're looking at the trade issues between the United States and China, of course. And the third issue that is on everybody's mind is non-OPEC production growth. That's accelerated in the last few years, and where's that going? And then, of course, into the melting pot, you've got the mix of OPEC's efforts to try and balance the market. So people are stepping back, looking at all that, and trying to figure out where it's all going.
So have you felt that in terms of client activity, or do you feel it more in day rates?
Well, day rates actually have been moving up over the last, I would say, 12 months. When I was on your show earlier in the year, we saw a big increase on an award we had for our drill ships in terms of day rates. We got close to a doubling of what the spot market was on a long-term contract. But there's another asset category that Diamond Offshore specifically is focused on, and that's the moored asset category. And we're seeing day rates in that particular space significantly up from where they were before. So day rates are coming off the bottom. There's no question about that. The question is, where do we go from here?
And what do you think? So we break it down for a second. So if you had day rates for, say, drill ships, which is, say, ultra deep water, they doubled, like you said. What about now? And is there just too many rigs out there to have any pricing power from here?
Yeah, I think if you look at primarily, there's two asset classes in offshore drilling. You've got the ultra deep water drill ships, of which it's not just what's happening in the macro market around supply and demand. There's a lot of drill ships on the market, and is there enough capacity and demand moving forward to absorb all of that supply? Now, on the other side, you've got the moored assets, or the semis, mobile offshore drilling units that are called semis. And some of those are moored, some of those are dynamically positioned. But in that space, we've seen a lot of scrapping of the fleet. Of the 126 assets that we've seen scrapped since the beginning of the downturn, about 90% of them are in the second asset category, which are the moored and DP'd semi-submersibles. So with that scrapping, we've seen a tightening in that space. And as on the back of that, as the market has picked up during the course of the year, we see that those day rates have started to substantially move up.
Can you give me some clarity or visibility on numbers for both?
Well, yeah, let's go back to the ultra deep water space, which is primarily drill ships. There's about 134 of them today, maybe 65 are contracted, of which maybe 45, 50 are actually drilling. Because of the oversupply in that particular asset category, day rates are somewhat struggling. Now they're up off the bottom, and I think what we were very pleased about in our second quarter call, we announced day rates that were close to around $300,000 a day, which was almost a doubling of the spot market. We were fortunate. We caught a specific window of opportunity whereby, as there was a little bit of a tide that was building in terms of day rates and utilization in that asset class, we were able to grab that. But I think since we've seen a little bit of this softening in the oil markets themselves, that door is closed, and I think day rates are somewhat limited in terms of further growth. So we were actually very pleased to capture that. On the second asset category, being the semi-submersibles, as I spoke about, the scrapping has somewhat fixed that space, and day rates for those are actually outstripping the day rates for the ultra deep water assets. Now, what's so good for Diamond Offshore is that we're a leader in that space, especially the moored asset category. There's of the moored semi-submersibles, there's about 58 out there, maybe 44 that are actively marketed, and we've got 6 in the top 12. And those day rates have gone into the 2s, so they're moving forward and they're recovering.
Then why don't investors feel good about your stock? It's the CapEx that has to go into it. Is it not believing that you're going to sustain those day rates? What gives?
Well, I think in general, the investment community has been looking at us in terms of net asset value. And I think over the past, let's say 6 to 12 months, sentiment has shifted towards forward earnings and earnings multiples. And those are challenged. You know, for all of us in this space, they're challenged. We need day rates to move higher. And as I've just explained to you, we're starting to see that right now today. Now, I think the big kahuna or the you know, the elephant in the room is shale production. And if you look at what's happening in shale, specifically in the last couple of months, I think sentiment is somewhat changing in that the question is it the gift that's going to keep on giving? Well, generally, when you use that terminology, it ends at some stage. And I think if you look at geology, if you look at drilling efficiency, and you look at the number of drilled but uncompleted wells out there, again, you put that into a melting pot. I think there is a suggestion that the incremental production out of shale that we've seen, which has been strong over the last couple of years, is beginning to ramp down. And when you step back and look at shale in terms of the oil mix, it represents less than 10% of total oil supply.
Yeah.